Good morning to all. Thank you for being here. The webinar is about to start, but please hang in there while all attendees connect. Thank you. Good morning again. My name is Cesar Iliano, and I'm the Content Director for Bain Americas. I'd like to welcome everybody to this seminar, in which we will discuss the results of Bain Americas 2020 mining survey. I'd like to say that we understand that this is a very difficult time for everyone. We hope that you are all in good health and taking care. We would also like to extend a big thank you to all those listening today who took the time to participate in this survey. The survey was produced in collaboration with mining consultancy company Vantaz Group and with supporting activities from Sociedad Nacional de Minería de Chile, SONAMI, Instituto de Ingenieros de Minas de Perú, AUSCHAM, Cámara Argentina de Empresarios Mineros, Cámara Minera del Ecuador, and Cámara Minera de Chile. So I'll tell you now how this webinar will go through. Our regional mining editor, Laura Superno, will begin the webinar with a presentation of the highlights of the survey we've done, which will allow you to see what to expect in the coming months in this very unusual year for the industry and for all industries. We will then hold a discussion with Mauro Mezzano, co-CEO of Vantaz, a consultancy service group with operations in Australia, Chile, and Peru. I'd like to remind all participants that you are all in listen-only mode, and questions can be submitted at any time using the chat function on the right side of the screen. Depending on the time we have, we will try to answer your questions at the end of the discussion panel. So now I leave you with Laura. Laura, please.
Good morning, everyone. Thank you very much, Cesar, for the introduction. We launched this year's mining survey in late July, looking to measure the impact of the COVID-19 pandemic on the mining industry in Latin America and to see what players in this sector are expecting for the future, the near and medium term particularly. I will briefly just mention the survey demographics. The survey received 325 responses. 28% of those were from people representing mining companies of different sizes, and 62% were from companies providing goods and services, equipment, parts, maintenance, engineering, consulting, and the rest were from other types of entities. The country where most respondents said they are active is Peru, followed by Chile, Mexico, Argentina, Colombia, Ecuador, and Brazil, and many respondents did say they're active in multiple countries in the region. Copper was the mineral most respondents said was relevant for their organization, followed by gold. And again, many respondents are focused on more than one mineral. So let's go to the results of the survey. 52% of all respondents said that the COVID health crisis has had a big impact on their company's activities in Latin America. And another 40% said they have felt a moderate impact. We asked respondents to comment on the nature of the impact to their companies, and by far the most common response was related to reduced mining operations, reduced production and project development, reduced demand for goods and services, and in general, the impacts on company revenue. Basically, the emergence of the pandemic just put the brakes on mining activity and investment, and that really sent a ripple across the chain of suppliers and providers of services in terms of sales and income. A big majority of the respondents said that their investment plans have been affected by the pandemic, 72%. If we look only at the mining operators that responded, it was slightly higher, 76%. We have identified two main facets to spending reductions. One has to do with companies' inability to execute their planned spending because of quarantines and travel restrictions. And the other was an almost panicky reaction from operators to that sharp dive that metal prices took in February and March, especially in the base metals. And at that time, companies really wanted to preserve cash because there was a lot of uncertainty about what would happen with prices and their continued ability to generate revenue. Looking at what will be companies' main strategic focus in the near term, 43% of survey respondents said that it will be operational optimization, which actually has been the result in the last few years of BN America's mining surveys. Next, 27% said that miners will be mostly focused on ramping up their operations after the shutdowns that occurred during the pandemic. And that really doesn't leave a lot of room for growth at this stage. However, there has been a consistent message across companies and governments that project development and other capital expenditure plans are only being delayed, and that projects have not been shelved or canceled. So while there is some uncertainty still, it seems reasonable to think that activity will bounce back soon after the pandemic itself comes under control. So on the last slide, we saw that just 5% of total respondents think that M&A will be the top priority for mining companies in the near term, but obviously it remains on the table, on the radar. More than half of respondents said that mergers and acquisition activity is likely to increase in the near or medium term, even if it's not the main focus. Metals prices, as most of you surely know, have recovered strongly from those lows in March, and continued strong prices would support the continuation of the trend of higher M&A activity that we were already starting to see over the last couple of years. And despite the large to moderate overall impact of the health crisis and the majority of respondents saying that investment plans have been affected, 70% said there has been no impact on budgets to address carbon emissions, and 8% even said the crisis has led to an increase. So the survey results don't tell us how much emphasis each entity had placed on reducing emissions before the pandemic, but we think the results reflect that growing need that we've been seeing for companies to address the issue of emissions from a business standpoint. The results on digital transformation and technology were somewhat mixed, although the plans to increase spending on new technologies did represent the largest part of responses, at 37% if we add those who plan to increase more than 2% and smaller amount of less than 2%. The COVID pandemic really has been a driver and an obstacle for digitalization, because it intensified the need for technology while at the same time restricting many companies' budgets. So we think it's likely that a longer term effect of the pandemic will be to accelerate that move toward digitalization. Now, here we can see that really a broad majority of respondents to the survey expect to see a recovery in mining investment happening during 2021. Most people said this will happen in the latter half of the year, but it's really clear that people are thinking next year is the year of recovery in this sense. The first driver of renewed investment is going to be mining companies executing that investment that was halted due to the health restrictions, sustaining works at operating mines like maintenance, and also ramping up construction projects, which is something we're already starting to see. Projects at earlier stages, we think, will likely come a little bit later as mining companies first prioritize their existing operations and wait a little bit for some of the general uncertainty to be reduced and for financing to be more widely available. So we also asked survey respondents whether they think a new wave of projects is likely to take place once the COVID pandemic subsides. And we did not get a very clear answer. 39% of people said yes, there will be an increase in new projects, while 32% said no. Apart from the rebound in metals prices, a primary reason to think that there could be an increase in projects is the interest of governments in the region in fast-tracking mining projects in order to stimulate investment and economic recovery. Most governments in the region were already trying to streamline permitting, for example, before the pandemic, and progress in this area, I think, will partially determine the timing of new projects. On the other hand, there are underlying social conflicts at a lot of projects. There's going to be some lingering uncertainty probably about the direction of the global economy and just what the new normal is going to look like. And those factors could delay project development beyond the immediate end of the health crisis. So we also asked people how big of an impact they think COVID and the health protocols that are going to be necessary is going to have on their operations going forward. And just over half of the respondents said these impacts going forward will be moderate, while 33% said it will be big. So that's versus the 52% we saw earlier that said the impact has been big so far. So an improving outlook. The main impact going forward will be related to rising costs as health protocols require the purchase of special inputs like PCR tests and also impact productivity. One survey respondent, though, told us that the increase in the cost of production of these health protocols will be around 2%, while another told us that factors like a strong US dollar, low oil price, and lower labor costs have improved profitability already by 7%. So if we look at those numbers and add that to higher metal prices, it seems possible, if not likely, that mining operators should be able to weather the rest of the pandemic. So opinions are divided also on financing. This slide shows that the largest percentage believes conditions will be improving over the next 12 months. However, 30% think the situation will stay the same, and 30% think conditions will be less favorable over the coming 12 months. We also asked how conditions compare now to 12 months ago, and 45% to that question said that conditions for financing are worse now, while 36% said conditions have not changed, and 19% said they're actually better now than before. Comments that were provided by survey respondents with a negative outlook on financing talked about increased risk and the uncertainty associated with the pandemic. However, those people that are positive on the financing outlook mentioned issues like lower interest rates and higher commodity prices. So there are really opposing factors there determining what is going to happen with financing. So overall, just 22% of the respondents to the survey said their company will be trying to raise capital over the next year. When we look only at mining companies, though, a larger group, 30%, said that they do plan to seek financing in the coming 12 months. Overall, the number of people who said they aim to raise capital in the coming months is significantly less than the 41% who see the conditions for doing so as improving. So that, we think, suggests that some of those people who said in this slide that they currently don't know if they'll be seeking financing over the next year could be watching the market for an opportunity to do so. Talking about what is the biggest threat to recovery, future waves of the COVID pandemic are considered to be the biggest threat. And that's probably no surprise given the impact so far and the lack of certainty that the pandemic can be controlled in the short term. This was followed closely by political or legal uncertainty. These were the results both in terms of the general recovery and also when we asked respondents to evaluate the biggest threat for their own company. Where we did notice a disparity is in the attitude toward the impact of possible weak commodity prices. 15% of the total group of respondents said that this is the biggest threat for their own company's recovery, while only 6% of mining operators said that possible weak commodity prices is a big threat. So we think that this reflects worry among engineering firms, builders, and other types of companies that depend on the mining industry's growth more than on metal prices themselves. Because while mining producers' revenues are already recovering, early stage development projects are going to need to see more long-term price clarity to really get moving. Okay, so Chile was strongly rated as the best company in Latin America for mining investment, followed by Peru. Both countries are facing what I would call significant political and social uncertainty, but they do have several things in common that are going to support mining activity in the long term and that have supported mining activity in these countries to date. For example, a long tradition of large-scale mining, a skilled workforce, reasonable legal clarity and stability. Their economies are both built around mining, and they both, really there's just an unshakable support for mining from the central government in both countries. So other countries in the region do have some combination of these factors, and many of them, like Chile and Peru, are working on improving permitting and other elements to attract investment. But these two big copper countries are clearly the favorites in this survey. So that concludes the main part of the results. I'll now hand it back over to Cesar to move on to the next part of the webinar. Thank you.
Thank you, Laura. That was a comprehensive analysis of what to expect in this industry for the months to come. As I had mentioned before, we are going now to talk to Mauro Mezzano, co-CEO of Vantaz Group, about his view on the survey findings and what he's seeing every day while in touch with different type of clients in the mining industry. So, good morning, Mauro.
Good morning. Good morning, Cesar. How are you?
Fine, thank you. Thank you for joining us today. So, to start the conversation, I would like you to tell us what are your main takeaways on what we've seen about the results of the survey.
Well, thanks. First of all, I would like to thank you, Laura, and BN America for organizing this second seminar this year. In this time of turbulence, it's great to have companies that share information periodically in this way. So thanks you guys for organizing this. The world is experiencing the worst recession since 1932, with a deep decline in the assets value and sharp increase in the unemployment rate. Regarding commodities, we have seen the worst drop in the value of the majority of the commodities within March and April, due to the collapse of the price of oil, which even has been trading in negative levels for the first time ever. Today I was reading the newspaper, and Australia is facing his first recessions within the last 30 years. So things are really very, very complicated. But since May, a recovery in most minerals and metals commodities prices have been observed following the Chinese government signals regarding concrete measures to increase liquidity and reactivate the economy. So I think in one way or another, and that's my opinion, we are lucky that this pandemic started in China, because maybe if wouldn't started in China, the government wouldn't be so active in those measures. But now they're very active, and as this centralized economy, things are moving very fast regard the way we want in terms of commodity prices. So that's some good news. On the other hand, the pandemic impact on production and expansion plans have affected the availability of material, pushing up prices, copper, iron ore, for example. Within some mining countries like Chile and Australia, no mining operation has stopped. Some projects, some greenfield project has stopped, but no mining operations. In some other countries, some countries some operations, have stopped, but not that many. But this has impacted maybe the shortage of supplies. So within that, and the Chinese government signals, the price have been up even more than $3 per pound. So I think we are facing a situation that, as Laura was mentioning, it is not good. But if we compare to other industries like retail, tourism, etc., I think mining has reacted in a much better way, due his reality, and also due the high standards of health and safety. And also because they've been very agile in terms of reacting regard testing. So I think we need to be very grateful for our industry. In this context, expectation surveys are very relevant, because they show perspectives for the markets in short, medium, and long term. So as we've been hearing, short term is not that bad, and looks like within the next 12 months, things should be in the way we want, or back the way they were, if the vaccine is fully implemented. But if you look toward medium and long term, well, Laura mentioned at the last slides, many South American countries, we could talk about Chile and Peru, have been facing social and political issues that will stay, and maybe will affect the new investment. So and we don't know how will continue China reacting after this first 12 months. So I think the word that represents the future, medium and long term, is uncertainty, definitely. Regarding the survey, it is very interesting to comment that the main focus of mining companies is operational optimization. Again, as Laura mentioned, 43% of the surveyed people believe that companies should focus on operational optimization, and only 27% expressed that the focus should be on getting back to regular operations. I think this is due the main downturn that we experienced as an industry during the second semester of 2015, where technology became even more important, and the industry understood that was not updated regarding technology. So that's why I think many of these operational optimization is driven by technology in terms of projects related to automation, data analytics, remote operations that are very much related also now with this pandemic, where implies moving people outside the operation, and they could work even from home or from a specific place. Another technology project that are focused into open the latent capacity. So I think that's something that started during those years and now have been not even continued. So in my case, I've been seeing that in some cases have been even increasing in this pandemic, because obviously it can be done within a situation like we are facing. Regard budget, we can see that only 18% of the respondents mentioned that they will reduce budget regard digital transformation, but 82 will increase or maintain budget, which is absolutely in line with what we've been seeing in the last not only 6 or 5 months, but the last, as mentioned, 2 or 3 years. Regarding vendors, this is very interesting for us, because I believe many of the respondents and attendees to this seminar are like us, mining vendors. 70% believe that local vendor engagement will improve. Why? Well, obviously, there would be a less risk of expecting from overseas if you cannot travel or you cannot transport stuff. So that's a very good news, because in countries like the one we are living in South America, the expenditure of operational costs related to local vendors, it's around 15–20%. In countries more developed like Canada and Australia, it's up to 55 or 60%. So the good news here for many vendors is that percentage from 15–20 could go up to, why not, 25–30. And if that happens, obviously will be a long-term benefit, because that will imply that they won't be going back to the old vendors if the delivery is at the level which is expected. So that's a very good news. Almost half of the surveyed people expect that during the second half of the 2021 we will observe a recovery. This is absolutely current with the expectation of global economic activity. So, as mentioned, investment plans will be affected not only because of COVID, but also because of social implications that have been occurring mainly in Peru and in Chile and some other countries. We believe that investment is critical for the industry, because if investment plans are affected, obviously the mid and long-term supply of copper will be also affected, resulting in deficit of copper. The good news of this is that price could still be going up due to this shortage, but in terms of the economy of the countries and the development of the industry, it's not really good. As a result of the pandemic, 55 of the surveyed people believe that mergers and joint ventures will increase in the short and medium terms. From my perspective, that's a critical, a very natural consequence of a normal classical crisis, which we could mention the 2008 crisis, the subprime crisis, and also the one I mentioned just before, the one that happened during 2015 and 16. But in this case, due to how the market is being going on. I think not many companies have been suffering because of shortage of cash, and I don't think really that many mergers and acquisition will happen. I think only the companies that have been not accessing to financing their projects, and they really need to invest because they old grades and they not being able to produce at equilibrium levels will be the affected, but not as a common crisis. And finally, I think we have very good news in terms of our beloved planet. It's very interesting to know that the vast majority of the surveyed people, more than 72%, believe that the allocation of greenhouse gas resources had not been affected by this crisis. So those plans are for long term, and those plans are untouched. And this is a substantial conclusion of the study that shows that despite the economic crisis that the whole world is facing, sustainability is a long-term goal, and companies won't give up, which is really good in terms of how the industry is behaving. So that's more or less in brief minutes my conclusions and my comments regarding the survey. So I would love to have the possibility of answer any question that could come to the minds of the participants.
Yeah, thank you very much, Mauro. I was just about to remind the audience that you can post questions on the chat function on the right side of the screen. I just wanted to ask you to wrap up your views. Would you say the survey captures this moment in the industry now where panic has been left behind and many companies are just planning or thinking ahead with very similar plans to what they had at the beginning of the year?
Well, yes, I think the survey captured what is happening in the industry. I could say that because I've been talking to my clients, and since even before, but since the pandemic started, and they reacted very quickly, many of them, and now many of them are thinking how to come back to not normality, because it will take a few months, but with the measure and the standards they have applied, production it's being maintained in some countries and not that much affected in some others. So I think definitely it reflects what is happening in this industry, that it is managing in a good way at overall in terms of other industries. Absolutely.
And I have a tough question there. You mentioned there were good news for vendors in the survey, and we also talked about many of big operators with minings in production were able to go back to kind of normal production quickly, because also prices went up fast. But many other companies depend not only on prices but also mining projects advancing, and the whole industry started to move again. So the question is, in your experience, how much longer can it take for providers and contractors and vendors to get back in normal business again?
Well, I will separate my answer in two. The vendors related with operation, the ongoing operation, should come back in a faster way. Many vendors have not been really affected much. Some other years, which was one of the first questions of the survey. But the way I see, even though there could be some minings that could come back, but I don't think it will happen. That should be within the next 6 months. Regarding projects, that's a more complicated question, because even though within the region we had 2 or 3 projects, greenfield projects, big ones like Quellaveco or QV2, for example. I think that could take a longer time. Many other factors do apply in terms of mobilizing people that could be more complicated. Some of the companies have decided at the beginning of the pandemic to stop the project, and some could be thinking today that could be a good decision to stop to avoid multiple contagions. So I think for the people that are more related, the vendors that are more related to project, that could be taken within 6 to 12 months. But as mentioned within my speech, I think the good news is the whole situation. It gives us an opportunity to offer to local operations our services, because the foreigners, the international, have some restrictions. So if we take that opportunity, that could be a good thing that could be lasting for the long term.
Okay, thanks. You mentioned that you were not completely online with what the survey was saying about M&As, but I just wanted to ask you, did you see any other results in the survey that were not at all what you had expected?
Not really. That was the only one that obviously it's something normal that you will think when you face a crisis, but this crisis is being very special. I just mentioned that within the 2008, the subprime, and the in the 2015, the prices, the commodity prices went down, and it stayed well in the first one for more than 6 months, and in the second one for more or less 1 year. In this case, the prices went down and stayed down for 1 month. So that's something that is very different in terms of a normal crisis impact for the mining industry. That was the only one that I think it surprised me in one way. But the other, it really the survey really reflects of what is happening, like focus in operation, technology budget not really change, financial condition not that good in the next 12 months, but then should be getting better. The local vendors increasing, and obviously the uncertainty for the mid and long term in terms of new pandemics and political stability and some other risks related to communities. So yeah, my answer is that was the only one.
Yeah, I have a question from the audience on the same subject. As a survey, I know you're not completely, you don't completely agree with this, but with an M&A activity expected to continue to accelerate, how do you think that can work with the mining companies saying that their main focus will be to invest to optimize operations? How does those two trends play along?
Well, when there is not much openness to finance big projects, the companies will tend to use the cash, if they have, within their operations to open up latent capacity, or maybe to develop brownfield projects. So I think in this case, that is what should be happening, and that's what is being happening. Many companies, some big players had big cash problems during the last 5 years within the 2016 crisis, but I don't see that happening now. They have recovered, and also the good news is, besides the one that have stopped, the prices have come up. So for the ones that have been producing, they've been receiving more dollars, so more cash. So I think in terms of that, it's absolutely understandable, and it's a good decision to invest in the operations, in this operational improvement. Maybe analyze the idea of doing of pushing a brownfield project and invest in optimization, internal optimization. So I think that should be the way things should go.
Okay, great, thanks. Laura, I know you. I mean, you
Yes.
organize and manage the mining coverage for the Americas for many years now, and I just wanted to try to understand, to capture how the mood for the industry has been changing in the last 6 months, from panic to where we are now. And I know you have been leading this Win America survey for several years, and I'd like to know if the results are in line with what you or what we were expecting when we started planning this months ago.
Mm-hmm. Mm-hmm. Yeah, well, I think the overall results about the impact of the pandemic itself are not too surprising. For example, the large number of companies that have reduced investment, or at least put it on hold, and the fact that there will be some cost implications going forward. And to talk a little bit about what the two of you have been discussing about M&A versus optimization. If we look at the results of surveys, our own surveys from the past few years, those underlying trends have not changed. The answers in this survey were very similar to the last few years. So operational optimization has been considered by our survey respondents of the last few years as the strategic priority for mining companies for several years now, or since that moment that Mauro mentioned, at least 2015, around there, if not before. And most respondents of the last few years of our surveys have also said that mergers and acquisitions will increase. So to me, the result of the majority of people saying mergers and acquisitions will increase this time, I didn't find it surprising, because I was looking at it more from the perspective of it being a trend that we've been seeing already for the past few years, and it has constantly been at odds with that need for optimization and coaxing out that latent capacity, like Mauro said, because prices were low. Again, also prices being low, like in that time of crisis, sure, there are companies that are having a hard time and might get bought up, but also when the commodity super cycle ended before that, 2011 or 12, prices started going down, the pullback in spending was huge, and exploration dried up, not only junior companies, but major companies. And so when they really started thinking about growth again, maybe 2 years ago, there just aren't that many possibilities. There aren't that many assets that are ready to develop. So that's where that M&A trend started to come into play. Companies looking at needing to grow more than it being a trend of, obviously, if they can find a company that's struggling and get it for a good price, that's even better. So I think that's where that M&A answer is coming from in this survey. And I think that once the virus is under control, the vaccine comes, and some of these risks and volatility and uncertainty are gone, that is the path that the industry is going to retake.
Okay, great. Okay, that's all for today. Thanks again to all of our attendees for joining us. in this webinar, and a special thank to Mauro and Laura for being here today. And again, a big thank you to all of you that took the time to reply to answer the survey. Would like to remind everyone that the summary of the full report will be sent to all of you who answered the survey. So thank you again for your time. Please take care, and on behalf of everyone at Americas, goodbye for now.
Clients change, businesses change. The world is transforming faster than ever, and the opportunities are there, waiting for us. Over 20 years of digital innovation have turned us into the leading business intelligence provider in Latin America. BN Americas has a database with thousands of industrial projects, company profiles, key contacts, news, reports, and data, all in one easy-to-use platform. Every day, more than 50 on-the-ground journalists and experts analyze the region's major industries. Explore projects that feature opportunities for your business. Find the companies participating in those projects and connect with their decision makers. Make the best business decisions with all the facts and insights you need about the industries that are driving the Latin American economy. Get timely reports with the latest news about projects, regulations, and investments. Stay on top of the business trends. Find out what the risks and opportunities are for your business by reading the reports and analysis of our on-the-ground experts throughout Latin America. Redefine your business strategy and choose the path to success. BN Americas, connecting opportunities.